Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets lurking in corporate filings. Today we are diving deep into Silvaco Group Incorporated's latest earnings report, and let me tell you, there are some bombshells in there. Get ready because this is not your average financial review before we dive in. If you appreciate these straightforward breakdowns of complex corporate docs, do us a favor and subscribe. And for even more in-depth discussions and to connect with your fellow corporate sleuths, join our Discord community linked in the description below. Alright, let's jump straight into the financial meat and potatoes. The company reported a significant jump in total revenue, soaring by 70% to $18.7 million for the 3 months ending the 30th of September compared to last year. This surge is largely fueled by a massive 101% increase in software license revenue, which climbed to $13.8 million. It seems their core software sales are absolutely booming. Now, looking at the bigger picture, for the first 9 months of the year, total revenue rose by 7% to $44.8 million. While that is a solid increase, it is a much slower growth compared to the recent quarter. This suggests that the explosive growth we saw in the Q3 might be a particularly strong quarter, or that some of the earlier months had more modest gains. We also see software license revenue up by 3%, and maintenance and service revenue up by 18% for this longer period. When we look at the balance sheets, a couple of things jump out. Their intangible assets, mostly tied to things like technology and customer relationships from recent acquisitions, have ballooned from $4.4 million to over $27 million. This is a direct result of shelling out cash for new companies and technologies, which is a big part of their strategy. Interestingly, their accounts receivable, which is money owed to them by customers, actually decreased. For the 30th of September of this year, it is $7.5 million, down from $9.2 million at the end of last year. This could mean they are collecting payments faster, or perhaps that sales in this particular period were more immediate in terms of payment. Now, let's talk about operating expenses. Research and development costs shot up by 111% for the quarter to $8.7 million. This is a huge investment, likely aimed at creating new software and staying ahead of the competition. They are clearly betting big on innovation. General and administrative expenses also climbed by 53% to almost $10.9 million for the quarter. This is attributed to acquisition-related legal and professional fees, plus executive severance costs. So, while they are investing in growth through buying other companies, there are significant costs associated with making those deals happen and reorganizing leadership. A big number that's gone down is litigation settlement, which dropped to zero for the quarter compared to $392,000 last year. For the 9-month period, it's down to $13.1 million from $15.1 million. This reflects the resolution of some major legal battles, which is a good sign for reducing uncertainty. Despite the revenue surge, the company is still reporting a net loss for the quarter. The net loss was $5.3 million, which is actually an improvement from a $6.6 million loss in the same quarter last year. For the 9-month period, the net loss stands at $34 million, a reduction from $43.6 million last year. So, while they are growing revenue, profitability is still a challenge, though it is improving. When we strip out some of those one-time or non-cash items, their non-GAAP operating loss for the quarter comes in at $2.3 million, a slight improvement from a $2.6 million loss last year. For the 9-month period, the non-GAAP operating loss is $10.5 million, also an improvement from $2.4 million gain last year. This suggests that their core business operations are still facing some financial headwinds, even as revenue grows. Looking at bookings, which is essentially signed contracts, they are showing strong growth. For the 3 months ending the 30th of September, bookings hit $22.8 million, a huge leap from just $9.9 million last year. For the 9-month period, bookings are up to $49.4 million from $45.5 million last year. This indicates a healthy pipeline of future sales and a strong sales team performance. Now, let's talk about the risks. They face intense competition, particularly from larger companies with more resources. This means they have to constantly innovate and stay sharp to keep up. Their reliance on international sales is also a double-edged sword, with a huge chunk of revenue coming from overseas, but also exposing them to currency fluctuations and geopolitical instability. And boy do they mention risk factors a lot. They highlight intense competition from giants like Synopsys, Ansys, and Cadence. They're up against companies with much deeper pockets, which means they have to be incredibly smart with their R&D spending and sales strategy. Their global reach is significant, with about 45% of their revenue coming from international customers in the recent quarter. While this diversifies their income, it also means they are vulnerable to global economic downturns, trade disputes, and currency swings. Legal issues are also a big theme. They are involved in various legal proceedings, including a major settlement related to a past acquisition acquisition. While some of these have been resolved, the potential for future litigation is always a concern and can drain resources and impact stock price. And as a public company, they face a mountain of regulatory compliance and internal governance requirements. Failing to keep up means potential investigations, fines, and a hit to investor confidence. This is a constant operational challenge. Finally, the stock price itself is a major risk. They've seen significant price swings since their IPO, and this volatility can make investors nervous and impact the company's ability to raise capital. Now, looking at these results more broadly, Silvaco Group Incorporated is clearly in a growth phase, driven largely by strategic acquisitions and a strong focus on their core software business. Their revenue growth is impressive, especially in the recent quarter, and their bookings suggest a healthy future. However, they are still operating at a loss, and the high R&D and acquisition-related expenses signal ongoing investment and integration challenges. The competition is fierce, and they have to navigate complex global risks. They are aggressively investing in their future technology, which is good, but it comes at a cost. The critical question is whether this investment will translate into sustainable profitability. What is your take on Silvaco's aggressive growth strategy and their path to profitability? Let me know in the comments below. If you found this breakdown valuable, please hit that like button. It really supports the channel. And if you want more of these deep dives into corporate filings, make sure you subscribe for regular updates. Don't forget to join our Discord community linked in the description for more in-depth conversations. Thanks for watching, and we'll see you in the next one.